Well, we're here at Lean's Lodge, and I guess you'd say maybe this is the last day of our visit and our fishing experience and everything else. Some would say this is the shank end of the ham, as far as activities are concerned. But we're delighted to have you here, a first-time attendee.
Yes.
Tell me who you are and what you do.
Sure. I'm George Goncalves. I currently an independent market strategist, but I've been in the markets for over 20 years.
Well, we had an interesting discussion this evening about what if we're in a world permanently with a 1% interest rate, negative interest rates in Europe and other places. What do you do as a bond manager? How do you handle that?
I think there's been a lot of denial over the last decade that this reality could actually one day take place where rates would stay lower forever. And I think we're probably seeing a more perverse kind of overreaction in the recent near term, where you've seen really deeply negative rates in Switzerland, and you're seeing massive rallies across European bond markets, especially very long duration bonds, really going up in value and almost trading like equities. Really kind of harnessing the convexity side of the portfolio. I think that's a little bit overdone, but it does kind of introduce this fear of I'm going to miss out on yield.
Right. Okay, so at least here the Fed hasn't delved into the world of negative interest rates. And at first I think, thank goodness, but maybe you have the same view on that as well. But what about this last move the Fed did? What do you think about that? Was it the right thing to do?
I think that the Fed is ultimately boxed in a very difficult situation of trying to do what's right and what does that really mean for the economy. Meanwhile, there's a clear focus that financial conditions matter to the overall economy and consumption. And so when the markets are kind of begging for something from the Fed is almost guaranteed to deliver it.
It's sort of interesting that the Chicago Fed Financial Conditions Index says we're probably about, even before the rate move, as accommodative as we've ever been over the whole course of the recovery out of the financial crisis.
Right.
So do we really need more?
I think the thing is markets operate on change, and keeping a level constant of form of financial conditions at where they are is not enough to satiate what markets really want. And so then they start to create these requirements out of central bankers, probably which are not necessarily needed for the economy.
Is this something the Fed really should respond to or not? Is it in the interest of the country and their mandate to respond to those demands or not?
I think that, again, if they're balancing out the potential fallout from disappointing markets and what that would do to reverberate through the economy, they have to respond. And I think they're taking a very, just like they had a kind of a measured approach in raising rates, they've now kind of like at least adjusted, disappointing the markets initially when they did the 25 versus some having wanted 50 basis points. But I do think it's something that is now, unfortunately, within their mandate, almost as a third mandate.
Do we see an exit out of this negative interest rate world for Sweden, or for Switzerland, and for the EU, and for Japan?
I think we're going to need to get to a point where a lot of this debt has to be converted to equity. And if you think about what this debt has done to recapitalize, and from a price appreciation point of view, to when you bought a bond at 100 and it's at 130, 150, you're getting all this kind of built-in capital. They cannot afford to let that go down, especially in Europe. It would open up a whole host of other issues. And the irony, though, at the same time, is that from a business model standpoint, they're not making the actual interest rates needed to actually have positive kind of cash flows, and that is kind of the dilemma they're facing.
Okay. When it comes to comparing Europe and other places, is that an attractive area at this juncture, and why?
I think the U.S. is still attractive, but then as we know, it depends on what kind of investor you are. If you're factoring in FX adjustments, if you're factoring in the cost of the FX hedge, not so clear. So the key in my mind is the shape of the curve. So if the curve is still positively sloping, this is what the Japanese in many ways and the Japanese policymakers have been trying to do, is do yield curve control. And this has been a topic also now that the recent Fed members have brought up as another tool if we do go into a downturn.
Sure, well, they can do, you know, to work along the yield curve, if in fact that turns out to be something that's needed, for sure, yeah. No, that's a possibility. They've done it in the past.
Yes.
It's not like this is the first time to consider that, that's for sure. But the question is whether they're gonna do it or not. And you know, I think, you know, when we talk about these negative rates, and the question is, how do you assess whether you're being compensated for risk when you have negative rates? That's a tough issue.
No, it does open up a can of worms, and you know, when you start to think about if you're just trading a bond like an equity,
Right.
then you cannot afford to see any losses.
What's your biggest upside that you're interested in?
On the market side,
Yeah.
quite frankly, I think what's been a difficult trade to have on and strategies to be prepared for is that we are entering and have been in a very volatile period. We've been
Sure.
for 18 months. Central banks have gone out of their way to suppress volatility, but they're not going to be able to manage to do that forever. And so, you know, volatility is probably something that should be in everyone's portfolio, some form of hedging strategy for increased, you know, variations in asset prices.
Well, that's a very interesting insight. We really appreciate it. George,
Thank you.
glad to have you here. Welcome, first time person.
Yeah, first time
Yeah.
fishing too. It was great out here.
Did you catch anything?
I did. I caught a little small salmon and a few bass, those open mouth bass, and
Good.
It was great.
Excellent. It's a lot of fun.
Yeah,
Really is.
appreciate it. Thanks for having me.
No, appreciate it.
Yeah.